now we'll begin our understanding with what is a financial statement. So before we go into the depth of understanding what statements or what reporting statements comprise of financial statements, let us understand what is a financial statement basically first. In a simple layman term, you can say financial statement are those statements which contain the financial information about an organization. Now the financial statements, they are the primary means of communicating financial information to the users of the users of the financial statement, and the users can be an external user as well as internal user. We're going to come that in a couple of minutes from now and understand who are external users and who are internal users. From what point of view both of them are going to be studying the financial statements. But as of now, understand this thing: the financial statements, they are the primary means of communicating the financial information to external as well as its internal users. Additional information that is not provided in the financial statements, that cannot be put in number format, that cannot be given in the financial statements, they are given as a note format, a financial statement notes. Supplementary information are also included in the financial statement, such as management discussion and analysis, other disclosures that are typically not disclosed in the notes, which are essential to understand the financial statements, and so on. So that is the purpose of financial statement. In short, to communicate the financial information of an entity to its users, and the users can be external as well as internal users. A full set of financial statement comprises of a statement of financial position called as a balance sheet, income statement known as a profit and loss statement, statement of comprehensive income. The statement of comprehensive income includes all those income and expense figures which cannot be put in the profit and loss statement, that is your income statement. Statement of changes in equity, that is the owner's money. Okay, what is the change in the owner's money, owner's equity since beginning of the year at the close of the reporting period. Next is statement of cash flows, and lastly notes to financial statement. Together, these 6 things comprise a full set of financial statement. I'll repeat those 6 elements or 6 statements once again. Statement of financial position, also called as balance sheet, income statement, also known as profit and loss statement, statement of comprehensive income, statement of changes in equity, statement of cash flow, and lastly notes to the financial statement. However, from a project management perspective, you only need to be aware of 3 key statements, which are balance sheet, profit and loss, and a cash flow statement. Balance sheet will represent the assets and liabilities. Okay, how much the company owns in terms of assets, how much is company liable to pay to the external parties, what is the owner's equity in that. Profit and loss statement, income earned for the period, expense incurred to the period, net result, whether the income earned is higher compared to the expense incurred, are we in a profitable stage, whether the expense incurred is higher compared to the income earned, are we in a loss making stage. And lastly, cash flow, at what point of time cash is expected to come in, expected to go out, and so on. But 3 key statements are required to be understood from a project manager perspective. Balance sheet, that is also known as statement of financial position, income statement, that is also known as profit and loss statement, and lastly statement of cash flow. So these were the 3 key statements which we need to be aware of and which we're going to study in depth in a couple of minutes from now. Before that, let's understand who are the users of financial statements. So as we just discussed a couple of minutes ago, there are 2 users, external and internal. The external users are the one who are interested in doing business with the organization, and use of these financial statements will help them evaluate whether they should be going ahead with the doing business with the organization, whether it's beneficial for them to do business with the organization or not. For instance, your investors, the company's investors, are external parties who need the information to decide whether to increase, decrease, or invest in a firm. Okay, or even sometimes to decide whether to take the investment from the firm. The creditors of the company, they need information to determine whether to extend a credit period to the company organization, under what terms to provide the credit, for how much period of time to provide the credit. The financial advisors and analysts who need the financial statements of the organization to help their investors evaluate a particular investment. When the financial analysts and advisors, they take up the company's financial statement, they study, they do the complete postmortem of the financial statements and come up with useful relationships, meaningful data that they give to the investors readily, and based on which the investors decide whether they should invest in a particular company or not. Also, the stock exchanges need financial statements. Okay, yes, you heard right. The stock exchanges need the financial statements to evaluate whether to accept a firm's stock for listing on the stock exchange or to suspend the stock tradings or not. So basically all the compliance is flawed. The stock exchange also determines the compliance is flaw from your financial statements. That's why it's mandatory for a publicly listed companies to upload their financial statements with the various regulatory authorities at least every quarter. There are different laws and compliances, but let's not get into the depth of this whole scenario, or else it will be a never-ending session for us. But I hope you got the basic gist that external parties are all those ones who are interested in knowing the financial status of the company to decide on to make their own decisions, whether to invest in the company, whether to trade with the company, whether the company is complying with the applicable rules and laws, whether to trade the stock of the company, whether to suspend the stock of the company, and so on. Next, we come to the internal users. Now, the internal users, they are the one who use the financial statements to make decisions that are going to affect the day-to-day operations of the business. Okay, they are basically the persons who are within the organization who are going to use the financial statements. Let's say, for example, management. Management needs the financial statements to assess their financial strength and their deficiencies, to evaluate the past results and decide on the future course of action. Okay, what steps, how well have they performed in the past, how well are they able to meet their expected budgets and develop the future course of action. Do they need to raise the bars, challenge higher themselves, or are they underperforming, so they need to take precautionary measures, active measures to make sure they are at least meeting the budget, the targets which they are setting for themselves. Next is the employees. Yes, now if you're wondering why will the employees want the financial information, they do need. Employees want the financial information to negotiate their wages, their fringe benefits based on the increased productivity and the value they are providing to the company. So let's say if the company is keeping on generating more and more profit, but employees are not getting any raises, any pay increment in the paychecks. Obviously, employees will want to determine how well is the company performing and why are their promotions and appraisals not happening as compared to the increase in the productivity, in the value which they are generating to the company. And how can they measure the value they are generating, the value they are providing to the company? The first means will be a reflection on the financial statements. If the company's profit are increasing drastically day by day, it's obvious that the company employees are doing a great job day by day. But if they are not being appraised, appraisals are not happening, if they're not being provided promotions and respective pays, they will figure out that their market value, their value is not being considered by the organization as they should. And that's why they also need the financial information. So with this thing in mind, with this background, I hope you got a clarity on what is a financial statement, what statement comprises of financial statements, and who are the users of financial statements. Once again, a complete set of financial statement comprises of 6 elements. Number 1, statement of financial position, also known as balance sheet. Number 2, income statement, also known as profit and loss statement. Number 3, statement of comprehensive income. Number 4, statement of changes in equity. Number 5, statement of cash flows. Number 6, notes to the financial statement. But from a project manager's perspective, at least if you are belonging to a non-financial background, you need to be aware of at least 3 financial statements, at least 3 elements of the financial statements, at least 3 components. Number 1, statement of financial position, also known as balance sheet. Number 2, the income statement, also known as profit and loss statement. And number 3, statement of cash flows. Now, with this thing, we end a concept of financial statements introduction.